Welcome, everybody, to the Chinchilla Pickin' Podcast. It is February the 4th, 2022. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and as always, I am here with Brandon Beaver. Brandon, how are you?
I'm doing good. How about you?
I'm doing well because I speak the King's English. But we are out of Cincinnati, Ohio, and we just got hit by a bunch of ice and then sleet and then snow. And our streets are actually looking pretty good now. But it was, I think, 36 hours straight?
Yeah, the roads were terrible yesterday.
Shut down a lot of our economy here.
It was weird because the main roads were the worst out where I'm at.
Well, I'm gonna have to check that out because I had a listener reach out to me who actually lives in your town. So we're gonna have to verify what you say is true there, sir.
I went to work what would normally be like a 30-hour or 30-minute commute, and it took me an hour and a half, maybe 2 hours to get home yesterday from work. And once I got into town, I thought, oh man, it's almost over. And then I got to the main road out here, and it was like getting into a boss fight at the end of a video game mission. Nice. I thought I was at the end of it, and then no.
Right.
Oh, why do we live in Ohio?
I like Ohio. So I disagree with you. I like the winter. I like the snow. I like that kind of stuff, man. I'm sorry. I know you don't, but I like snow. Back when I was in shape, I used to snowboard a lot. So for me, it was fun. You know,
I could have snowboarded to work yesterday.
Yes, you could have. Also, one other thing I want to talk about is the Olympics, man. The Winter Olympics have started. I'm a big, huge Team USA when it comes to Olympics. I lived overseas, guys, and when you live overseas, it's a little different than when you visit overseas. When you live there, you're not always treated nicely as an American. So when you see another American, you're like, hey, what's up, buddy? Yeah. You kind of bond. It doesn't matter white, black, brown, whatever race, creed, religion you have, as an American overseas, you like see another American, you have the instant bond. It brings us together. And, having living overseas during some Olympics, it really makes you be proud to say, hey, let's go Team USA. Let's root us on. Let's see what we can do. And there's some cool sports in there too. It's a chance to learn about sports that you don't normally get to watch every day. So.
Yeah, I was overseas for about 3 straight months back in like 2008. And I had the same experience. Like every time you saw somebody that was, you heard the accent and, they're from the United States, instant conversation starter. And I had a lot of people that, from the country that I was in that lined up to help me. And then I had a lot of people that didn't like me very much either, but
it's hit or miss, right?
Territory. Yeah.
Yep. All right, so how about we get going in here today? The rules. Brandon and I, we get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. We don't actually talk about it. Today, before Brandon gets into it, I just want to talk about on the last show, I reached out about NVIDIA, Cooler, and Intel. NVIDIA, I'm already up over 5%. That was a winner for me. Ding, ding, ding. Cooler is already up over 5%. Winner for me. Ding, ding, ding. Intel's flat, but remember, I was suspect these are all long-term positions I was playing. Rig continue goes up. That's another winner for me. Ding, ding, ding. After I've had all these great winners, let's hand it over to Brandon. Brandon, go ahead.
Oh, yeah, thanks for setting me up. You said that you were setting me up. Oh man. You know what? I've prided myself on my portfolio being fairly defensive, and I've been telling you guys to buy Meta Platforms, Facebook, whatever you want to call it, for the past year. And I gotta tell you, I did not expect a 26% drop the day after earnings. This is a rough one. And part of that's my fault too, because I could have looked back to 2012 when they were doing the transition into mobile, and they had a similar drop, but I mean, nowhere near what they did this time. But they shed some market cap back then too. So I could have expected that we were going to face this headwinds, but I didn't do enough research back into 2012 and the mobile change to actually see this coming. So this one's rough. Let's get into it a little bit.
Well, hey Brandon, don't feel too bad, man. I mean, my worst loss. I mean, I know you feel really horrible because you were telling everybody to buy it. One of my worst loss I ever took, like I didn't hold on because it wasn't a long term investment, and I actually took the loss, was a 35% loss.
Okay.
So I still got you beat. Um, so don't feel too bad. But yeah, go ahead and explain what's going on with Facebook. I got some comments as well. I read into it, but I'm gonna let you lead the way, sir.
All right. So here's the reported quarterly earnings this was for Q4. Um, they reported a $3.67 per share. That was the miss. It was a 5% miss. The expected was $3.78. They did beat on revenue, though. They came in with revenue at $33.67 billion. Expected was $33.44 billion. Now, here's the good from the report, because I think a lot of people are glossing over the good and just focusing on the bad, as they often do. And for the annual earnings, they reported their annual earnings too, as the end of the Q4. So the annual earnings came in as well. 37% increase in revenue, 43% increase in income from operations, 35% increase in net income, 36% increase in annual earnings per share. Share repurchases, as far as that go, they repurchased 19.18 billion, so a little over $19 billion, close to $45 billion of the Class A common stock in the Q4 and full year 2021, respectively. As of December 31st, 2021, they still had $38.79 billion of approved, authorized buybacks ready to go. So still $38.79 billion in buybacks coming up. Free cash flow was up 67% for the year. Now for Q4, and we're going year over year here, so we're comparing this Q4 to last year's Q4. Revenue was $33.67 billion, up 20%. Operating income was down 1%, so it's a bit mixed here. Diluted earnings per share, 3.67%, down 5%. Cash from operations was up 29%, and free cash flow was up 36%. The brunt of the hit to year over year growth is likely to be felt in the first half of 2022. And since the impact of the iOS change wasn't really felt into the second half of 2021. So I think we're actually in the worst of it right now. Now let's look at the bad. Facebook daily active users were 1.93 billion on average for December 2021. This an increase of 5% year over year. Monthly active users for Facebook, 2.91 billion as of December 31st, 2021, an increase of 4% year over year. Now we're looking for increases to be much higher than this. A 5% year over year growth in daily active users, this would be much compared to like what you would expect from not the Facebook of old. Any increase of 5%, for example, of customers, or 4% even, that would be more expected of like a Kellogg's or a Procter and Gamble, not of a Facebook type of company. Same thing with the revenue growth that they're forecasting.
Hey, can I jump in here? I don't mean to cut you off there, but
let me just add this in because this goes with it. Q1 year over year revenue growth, 3 to 11% is what they're expecting. 3 to 11%. Once again, this is why one of the reasons why the stock dropped. This is not indicative of a company that's still a growth company. This would be more in line with a Procter and Gamble or a Kellogg's or one of those companies that's been around for a very long time and already matured and is no longer a growth company. So that's why people panicked and sold this thing. That growth rate needs to be a little bit higher, actually materially higher, but go ahead.
Yeah, and that's sorry. I guess I spoke too soon. I should just let you finish your thought there, because that's exactly where I was going to go with it. This is a sign that Facebook has matured. Facebook is now going to have the growth rate similar to a mature company that's been around a while. And like you said, you gave examples of P&G and such, and Kellogg's and such forth. There are some tech companies that you seem like they mature, but then they bust out into another growth cycle because of innovation and different things have happened. I give the example of Apple. Early 2000s, Apple seemed like it was stagnant, it was matured, and this is the best it was going to do. Then all of a sudden, Apple came out with the iPod and then the iPhone, and next thing you know, boom, another growth spurt for Apple. So you never know what's going to happen in the future, but as of right now, they're not seeing the growth projections that people want out of a tech company, that they're going to give them that kind of PE
Yeah.
ratio
Now,
and that kind of future growth earnings
I do
ratio.
think that we will see another boom for Facebook at some time for innovation and regarding the metaverse specifically. That's why I'm still holding the stock. I didn't sell it.
So when people say the metaverse, because I see so many, and I want to clarify this now. All right, as a virtual reality guy, I want to clarify this. There are so many advertisements out there for like, oh, look at this. This is just like Ready Player One, metaverse. Invest in this company. They're doing this. They're doing that. I'm like, all right, guys, look. You can't just say you're a metaverse because you're an online company. All right. You can't just say, hey, we've created this thing here because you created something that you could do on a computer.
Yeah.
The metaverse has to be, by definition, I believe, and correct me if I'm wrong, but it's got to be virtual reality where I could jump into it and interact with other people live in a virtual reality form. And to me, Facebook is still the leader in this, but I agree. If Facebook's gonna lose on the social media platform to TikTok and the other new companies that are starting up, and that side of the business is gonna drop, yes, the stock needs to come back down to reality. But over time, I believe via Oculus, and Facebook's interaction with they're hoping to intertwine Oculus with the Facebook platform and kind of make those work together. You might see the growth back up again in that regards. And so there is hope for the future, but in the short term, man, I don't know. I believe this drop was definitely justified.
So here's the 26%. I don't think so. You had a 5% miss in EPS. And I know the guidance was weak here, but 26%, largest one-day drop in stock market history for mega cap stock.
Yeah, all right. And we're not talking about percentage, guys. We're talking about largest stock market drop in value.
Yeah.
That's billions of dollars, based off the company. And yes, it does deserve that, man. And 26%, yes. I'm sorry, because that number was based off, and I was big pusher of Facebook too back in like November and early December. If you listen to our podcast, I said Facebook's a buy. Now
right now it's got a price to earnings ratio of 17.27.
Perfect, and it needs to stay right there.
I don't think so.
That could maybe go a little higher. But here's the thing too, Brandon, when Facebook first dropped, you had the most options most people buying call options on Facebook. It just spiked the amount of numbers of call options saying that this is going to bounce back up. And that was the Wall Street bettors. That was the retail investors saying, hey, Facebook's going to jump back up. Let's buy some options and let's make like 30-40% off of it.
Yeah. Well, okay, so let's continue. I have more thoughts on that, but I want to continue a little bit with the earnings report here. From the CFO on the impression side, he said, we expect continued headwinds from both increased competition for people's time, and he specifically mentioned TikTok, and so did Zuckerberg. But continued competition for people's time and a shift of engagement within our apps towards video surfaces like Reels. And as they shift more towards Reels, this is going to take the focus off the news feed. And the issue for investors here is the news feed is like well monetized. That's where all the ads are, right? There's no ads on Reels. There's hardly any ads, at least on Reels, and it's not really monetized, and they're losing money on it right now. So they're shifting towards Reels, and they expect that's going to pay off in the future, but for right now, it's not, and that's actually costing them money. On the pricing side, he said that they expect growth to be negatively impacted by a few factors. Apple's iOS changes are expected to cost them $10 billion this year. Second, he said that they will lap a period of strong demand in the year prior, and they're hearing from advertisers that macroeconomic challenges like the cost of inflation and supply chain disruptions are impacting advertiser budgets. And then he also said, based on current exchange rates, we expect foreign currency to be a headwind year-over-year growth. And Facebook's Reality Labs lost $3.3 billion in Q4, which I don't think that's a surprise. We haven't matured the metaverse yet. So these investments, until the metaverse becomes monetized, these investments are going to be basically for losses in the short to medium term. So,
but hey, don't tell my credit card the metaverse isn't monetized, because it will disagree with you.
Well, you're trading the metaverse lands and buildings and stuff like that.
I sold my Decentraland, by the way, for 10 times what I paid for it.
Nice.
Boom.
Yeah. I think
because I didn't see a future in Decentraland. I saw that as a gimmick and it was over with. So I needed to take my money and run. Just like I see NFTs coming to an end here very soon. But as far as the metaverse, there is a future there. People do want to be in this virtual reality world and interact in that regard. Majority of people don't, but there's still a large millions of Americans who are willing to pay for that.
Yeah, I agree. So here's the thing. Facebook's drop took $232 billion off its market cap, representing the largest one-day fall in stock market history. Prior to this, largest drop in market cap was Apple when it lost $119 billion in 2018. So I understand the reasons for people reacting negatively to these earnings, but I do believe this is an overreaction personally. If you look at the numbers, the miss was mostly because of metaverse investments. It was not Apple's iOS changes last year that did it. And I think that Meta Platforms is actually a very resilient company that is actually not being hurt that much by these iOS changes. I know I said $10 billion in 2022, but there are other ways that they will more than make up for that, I believe.
Well, I mean, you got to look at it too. Like Snap had to change for iOS, the new I don't know, policy recommendations from Apple, and Snap had a record quarter and doubled in value. So, I mean, look, you got to look at that too. So, Snap was able to cover it.
Here's the thing: Snap is still, over the past 12 months, they're still down 35.66%. So there was an overreaction prior to that earnings as well,
due to the Apple restrictions. Like I'm proving your point you just made, which is these companies can handle these Apple restrictions and just move on with business as usual. It's a bump, it's a speed bump, but it doesn't stop the progress.
Right. 12 months ago, Snapchat was at $63.78. Today, even after being up 58% after earnings, it's only at $38.69 a share. So, I think this is an overreaction on Facebook. It's 5% miss on earnings per share, taking the hit that they've taken from Apple, and also having to invest in metaverse, which is not profitable yet. I thought it was a bad quarter, but I didn't think it was this bad. And one of the reasons why I think you saw that 26% drop, a lot of trading companies, trading firms, when they start to see that 15 to 20% drop, and by the way, Facebook is by and by large mostly owned by institutions, mostly owned by firms. And when they start to see that, they just want to get it off their books so that incoming clients won't see that they're owning Facebook and down 15% on it. So they'll sell it at any price at that point in time, and they'll just drive the stock down because they don't care. They just want to get rid of it. The other thing is that given the fact that Facebook is heavily indexed, heavily owned by universities and countries and stuff like that, these countries and universities, these kind of companies do not like to see volatility in their portfolio. So when they see something like volatility jump like this, they'll often trim it. But I think that other companies that don't have an overweight position will then step in and buy it again. So you may see like a lot of volatility in this in the next month as a lot of shares continue to trade hands. And this may even drop 10 to 15% more. It's hard to tell if that's what's going to happen from here. Because like I said, I think it's an overreaction. Are we going to see more more capitulation, possibly. I added more to my position today, and if we get another 10 to 15% drop, I'll probably add more then. I think that right now that this is a value play, in my opinion. And I think that if you buy Facebook, you really have to keep the long term. I'm talking 5 to 10 years in mind, because I do think they've got a large war chest of cash. They'll get through this. They'll be fine in the end. Go ahead, Dave.
Yes, it is heavily indexed. And what that term heavily indexed means for anybody who's listening and doesn't quite understand, heavily indexed means a lot of index funds, ETFs, mutual funds own this. And to go on that point, actually, CNBC did a good job of covering this point. They actually listed the top 5 companies when I was watching them the other day that most mutual funds and ETFs and all those own. And the top 5 companies every single time, Facebook was in the top 5 of every kind of hedge fund, mutual fund, everything. Top 5. Google's also up there. Microsoft is up there. You got Amazon is up there. And then for surprising guys, what surprised me was United Healthcare is also up there. And that's heavily owned and indexed. And I looked that up after I saw that on CNBC, and I looked that up and I started researching a little bit about United Healthcare. But yes, it is heavily owned by the mutual funds. And so if you opened up your 401k after that event, you would see a drop in it. If you open up your IRA, 401k, anything related to that, you'll see a drop due to Facebook pulling down all the other ones. Microsoft, I believe, is safe, but it went down with it. So it was a good time to buy in and get a nice little jump up. Same thing with Google, but Google was skyrocketing off their stellar bottom line earnings. We haven't even talked about that. Right now, I want to continue with Facebook, but I also want to mention at the same time Facebook reported at the exact opposite end of the spectrum, you had Amazon, which has the highest jump in one day for value for a company in stock history. At the same time, you had the biggest drop in value in U.S. stock history for a company. So, I mean, you had that yin and yang there at the same time in the stock market, and people were wondering where to put their money. I mean, it was simple, you know what I mean? But yeah, I mean, I just want to make that point. You give it back to you where you were going with the Facebook.
I think that's another reason why it was an overreaction, because people saw the Google earnings, they saw the Apple earnings, and they saw the Amazon earnings, and those companies are always going to be compared to each other because they're always a part of that FANG index. And because Facebook disappointed, they got clocked. They got hit hard, really hard. And this one really hurts for me because like I said, I didn't expect it. I made buy calls on some China stocks and stuff that haven't done well over the past 6 months, but I had actually outlined the headwinds that were going to face those stocks on this program and told you what might happen because of the VIE structures and all this. Facebook's not a VIE structure. Facebook is a company here in the United States that is traded directly to people in the US with a ton of money on hand, and I just did not expect the 26%.
Well, and I think this is a good learning moment for us. I mean, for you, for everyone who's listening, is like, Brandon and I at the end of last year, and I talked about this in our podcast 2 weeks ago, is like we were on a hot streak.
Yeah.
We couldn't lose.
Yeah.
We could not lose. If we tried to pick a bad stock, for some reason it would double.
Yeah.
We were on a hot streak, and we were just throwing money around like it was nothing, making it rain everywhere we went. And then, all of a sudden the end of December hit, and it just came to a screeching halt for us. And well, for me, and it was a wake up call that, hey, you know what? I can't be overconfident. I can't be cocky. Yeah. I gotta realize this market can eat my lunch any day of the week, and I need to make sure I'm doing my research and I know what I'm doing.
My streak here was until this Facebook drop. Berkshire Hathaway, AIG, Procter and Gamble, Lockheed Martin, JP Morgan were all good calls. But you're going to be wrong sometimes, and sometimes you're really wrong. And history will judge this one. so far I'm way wrong on Facebook, but I'm sticking to it.
Well, as
Either
Matt
way,
Damon
I'm
says,
selling
fortune favors the bold, right?
it. Yeah.
Joke. It's a joke about his commercial. So what are you saying? What's your call again? I didn't quite hear. I interrupted you. What
So,
was it?
so I want this. I think you could add to this for sure. You buy it, and if it's another 10 to 15% drop, I'll buy again. If you're in the position where a lot of people just when they get their paycheck, they set aside a certain amount, and then they add to their portfolio. I do think you need to be diversified because at this point in time, there's too many unknowns in the market. There's too many things happening that are just going against you. And last year, we were on the recovery from COVID. Diversification was not a priority for me whatsoever. But now that we're out of that and there's so many unknowns in this market, diversification is a priority, which is why this did not tank my portfolio. But I still say buy this thing. And if you need to add some into financials to stay diversified because you might, you don't want to be too overweight tech, that's fine too. Um,
Or you can add in oil because I think oil is going to continue its hot streak right now.
yeah.
If you allow me 5 minutes at the end of this, but
If you don't have to rush into Meta right now. Like I said, it could take another 10 to 15% drop. And you're seeing a lot of ratings and analysts come in and cut their price targets and all that. I give no attention to those people whatsoever because they set these price targets and they just adjust them constantly so they don't look stupid at the end of the year. If they're too low, they'll adjust it up. If they're too high, they'll adjust it down. So they just don't want to look dumb at the end of the year and have way too many things that they called wrong. So they just continuously adjust it as the price goes. It has absolutely nothing to do with value, in my opinion, whatsoever. So you're seeing a lot of ratings adjustments on this, and some of them are coming. A lot of them are coming down. I have no problems with that whatsoever, and that's playing no no role whatsoever in my decision making here. Just so you know, if there's anybody that's new into the market and you did buy Meta platforms, you don't want to be too scared by an analyst jumping in and cutting their price target from 400 to 330 or whatever. I pay no attention to those people.
there you go, man. There you go. That's Brandon's decision on Metaverse. If you don't mind, let's shift gears. I'm going to cover a couple of things really quick. I'll go over this. I'm not going to spend a whole lot of time on either one, but I do want to cover a few minutes of this, that, and the other. First off is oil. Oil continues to go higher. I only see oil going higher, and that is due, again, to geopolitical events via Russia, Ukraine, China, Taiwan. If the events in Ukraine do not get better and Russia does invade Ukraine, you will see sanctions put on that pipeline from Russia to Europe. Europe's going to need oil. I see Nordic Atlantic tankers getting a rise in stock price because people are going to have to use them to ship the oil from the United States to Europe, and thus we're going to have to pump out more oil in the United States, and thus you're going to see oil companies that drill here in the United States get more permits and permissions and actually open up more wells. So although it's a sad event, an event I don't want to happen, but if it does happen, you will see money to be made in the oil industry and in the tanker industry in that regard. That's my thought on that. Brandon, any thoughts on that, given the geopolitical situation?
Yeah, I agree with you. And inflation is on your side on this one as well, because I mean, oil, it's been the biggest beneficiary, unfortunately for us, of inflation. It's grown the most in price over everything, which is understandable. My question for you is, if you were to pick a company, which one would you go with?
ExxonMobil. Or
ExxonMobil.
yeah, I know Jim Cramer called what was it, Callon Petroleum. I've traded Callon Petroleum before. The Callon Petroleum has in the past, they have reached out to get funding from various different ways, and the ways they have reached out to get funding and that type of funding, they didn't have a specific investment use for it. It was just to pay the bills via stock purchases and so forth, or loans. And I don't like it when a company has to do that to pay the bills. I don't mind it when a company has to do that for investments such as buying a new warehouse or buying some more rigs, or buying some land so they could put their new manufacturing plant there. I get those type of investments because they're going to have ROI. But when you're doing that kind of loan payment to pay the bills, I don't like it. And that was a couple years ago. Yes, oil price has gone up, so Callon should be valued, correctly, but they're still not at the price that they were at before oil prices started going up. But neither is Apache either. And Apache is a major rig player, but that's because they can't get permissions to do rigs in the United States, which is where Apache was big at. So yes, I mean, you can pick and choose your arguments here. Kramer's big on Callon Petroleum. I'm not. I'm sorry. I'm a bear on Callon Petroleum. I believe the play is ExxonMobil. I believe the play is Rig. I believe it's Schlumberger. I think those three
that's what I was
companies.
going to ask about Schlumberger.
Yeah, those three companies
right
are my play.
See,
those three companies are the ones.
Schlumberger.
So you're on the same thought process as me.
Yeah.
Those are my plays. If you believe that oil is going to go higher due to inflation or due to geopolitical events, those are my three companies I would buy.
Awesome.
One last thing I want to mention on the show, I've shed the news many times about how Tesla joining with Solar City wasn't really making any money, and then they made Solar City part of Tesla, and then they started making lots of money, right? Because Solar City was profitable and bringing in money. It was the cash cow to be able to pay for Tesla's projects. So here's something that happens though: is California is home to about 40% of the nation's residential solar energy capacity. Pardon me, solar energy capacity. And Tesla's a big player in this. It used to be called Solar City. It's now called Tesla. Tesla's a big player in this. Some of the changes is homeowners are going to receive a lower rate for the power that the rooftop panels produce. Plus, they're going to have to pay a monthly charge of $8 per kilowatt to maintain the electrical infrastructure of the network. So if you live in California and you were all of a sudden during the summer months making money back, well, you're probably going to make money, but not as much. They're going to lower how much they pay you, and then they're going to charge you because they got to use their the power lines to run your power back into the system. And this is a change that may deter new people from getting into the market. If you already got solar panels up, you're not going to change, right? But if you don't already have solar panels up, then you may think twice, because now the money savings you thought were there is not going to be there. Now, Tesla has moved most of its operations, and it's going to continue to move to Texas. Does that mean that the solar panels are going to be focused more in Florida, Texas, Arizona now, and less in California, where there was all these subsidies and money being thrown around and it's being cut back? I don't know, but this was the most profitable. No, actually, let me retract that. This wasn't the most profitable division of Tesla. This was a very profitable division of Tesla. At one point, it was the most profitable. I believe the automaker is now taking over that part. But at one point, it was the most profitable division of Tesla. And, is Tesla's profitability now going to be hurt because of this in the long term? Brandon?
You're talking about my white whale here. Oh man, you know what? I think of Elon Musk sort of the same way as I do Apple. Anytime it looks like there's going to be a major headwind that it decreases their profitability, they find a way around it. So that's one of the good things about having a brilliant CEO that is on your side, and that's going to work his butt off to make sure that he doesn't get hurt by much of anything. So
there you go, man. I agree. I agree. I think that they're going to be right where they're at. Again, long term, probably overvalued, but probably not, because they do estimate 40% growth this year. So yeah, but where's that? Here, my question is, I could probably dig into the numbers and see where that 40% is coming from. Is it coming from the solar panel division? Is it coming from the automaking division? Where is that 40% coming from? They combined companies all under one name, so now you don't know exactly where that money's coming from, right?
Yeah.
So, I mean, and that's the question. And now with, California cutting back on some of the subsidies in ways that helps out homeowners who have solar panels, you're going to see, a drop of people willing to invest in it there. And you're going to see, is that going to affect other places? I don't know. I'm just throwing out the news. I made my money last week in Tesla. This week I didn't buy it. I should have bought it when it dropped down below 900 because I would have made another 5% this week off of Tesla again. So it's something to look at. You could channel Tesla all the time, but you just got to be wary of it because sometimes a company will drop and you're thinking, oh, it's going to drop to the bottom of the channel. And it keeps going. So just be aware. Always save some money back for your cost basis is my recommendation. Brandon, anything else you would like to add to?
Just a couple of days ago is my full intention to come on here and talk about Apple's stellar earnings and talk about how we have been eternally bullish on this company and probably will remain for the foreseeable future because they knocked it out of the park. But then Facebook punched me in the gut last night. So
man, it happens, brother.
Yeah,
it happens.
It happens.
Google knocked out of the park. I can't believe. Can you name another company that got $27 per share profit earnings per share? I mean, come on.
No.
How much money does one company need? How much money does one company need?
I told you, as long as the consumer stays relatively healthy, inflation helps Apple.
Google should just go buy a country at this point because they probably could.
Oh, you're talking about Google here with the 27.
Yeah, Google. Sorry, yeah.
Yeah, I should have known that.
$27 Google, $27 a share EPS.
Yeah.
I mean, come on. Yeah, it's just they're gonna go buy a planet. Pluto's theirs. It's no longer Pluto. It's Google 2.0. All right.
Alphabet 2.0.
Alphabet. Yeah, sorry, Alphabet.
We'll never stop calling Facebook, I don't think, because we've never stopped calling Google.
Yeah, we still. Yeah, I know, right? That's all I got, man. Brandon, final thoughts. Actually, here I'll go first, and then you go second. I got a final thought here. Keep an eye on oil, guys. Unfortunately, right now it is tied to politics and the geopolitical things are happening around the world. Unfortunately, but fortunately, because now if you think that those things are going to happen, then you know how to play it and you know which ones to buy. In my mind, also, it wouldn't be a bad bet to hedge on maybe some missile makers such as Raytheon or Northrop Grumman and get a couple of those if you believe that there's going to be Lockheed Martin. If you believe it's going to be. Yeah.
Sorry, I didn't mean to interrupt you, but
no, that's fine. Do your research, take a look at them. If you think there's going to be any kind of events taking place over the next few months, I believe that during the Olympics, everybody's going to play nice and nothing's going to happen until after the Olympics are over. Brandon, final thought from you.
One thing I want to push on everybody here is I've seen a lot of new listeners come in and listen to old episodes of the show, which is fine. That's great. I know you want to go, you want to come to our show. You want to listen to a profile of your company. That makes sense. But a lot of our stock picks here are time sensitive. And I just mentioned Lockheed Martin, which I still like, but since I first called this a buy on the show, it's been up 14%. So you really should listen to the most current episodes if you're trying to hear what our current thoughts and opinions on these stocks are, because the market has been moving really, really fast. A large majority of the largest portions or the largest drops in stock market history have come in the past 2 years. So that just tells you, I think the top five, I think it was like 4 or 5 of the largest drops in stock market history as far as market cap goes have come in the past 2 years. And it just seems like right now a week is like a month, and then a month is like a year in this market. So we make these picks and oftentimes they have runs. And if you go back and you listen to a show 3 months ago, you may have missed it. So
there you go. But I'm back in NVIDIA. So that was a pick I had 3 months ago that I'm back in now. So because it dropped down. So I'm hoping to sell again when it hits 300 again and make my money.
Hasn't been. I really need to be watching NVIDIA more often.
I know, seriously, it's a moneymaker for me. Over the years, I seriously I owe all my furniture in my living room to NVIDIA. Thank you, NVIDIA. That's all I got, Brandon. That sounds like that was your final word as well. So then, as always, guys, it's your chilling pick, and we hope we've been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good night.